Hey, what's going on, everybody? Patrick Carr here at Blue Collar Media Group. Excited to be here with my friends over at Team Wonder Women. You know, there are a lot of misconceptions about credit, especially when you're looking to build a home. Today, we're gonna get all of those answered with Miss Sally Vance. We're gonna talk to her about some of the misconceptions and do's and don'ts when you're looking to make that new home purchase. Let's step inside and talk to Sally. There are so many things that people want to know, especially when they're looking to purchase a home. So we appreciate Team Wonder Women and Sally Vance opening their doors to Blue Collar Media so we can learn everything we need to know about credit, do's and don'ts. My first question for you is, why is credit important when you are applying for a mortgage?
Well, when you're applying for a mortgage, obviously credit is going to be one of the most important things that not only loan officers like myself, but underwriters are going to take a look at. The higher your credit score, obviously the better your interest rate and PMI as well.
So what credit score do lenders actually look at? There's 3 of them, I believe. Is it 1? How does that process work?
So we are actually going to pull a tri-merge credit report, which is going to pull the Equifax, Experian, and TransUnion credit scores. And once we get all 3 of those scores, we're going to take the middle of the 3.
Now, has there been anything recent that's come down to say that things could change in how they average those scores? Is something about that?
Yeah, actually Fannie Mae and Freddie Mac are now going to take the average. So if you have maybe one borrower that has possibly a 650 credit score and your second borrower has a higher score like a 750, it's actually going to start averaging now. So that should help with interest rates and obviously qualification as well.
If someone is looking to increase their score with all 3 credit bureaus, what is the most immediate thing they can do to help improve?
Typically, the number one thing that we see that's holding people's credit scores in the mid 600s is going to be high revolving credit card balances. So the number one thing you can do is to get those revolving debts under 30% of the high limit on that card.
What is the biggest mistake that you see applicants make when they are applying for a mortgage?
Typically, there's so many mistakes actually that can be made, but the number one cardinal rule is that once you are under contract, you should not let anyone pull your credit because underwriters are going to do what's called debt monitoring. So what that means is they're going to see any inquiry that you have after contract date. So if you have opened a new debt, we're going to need to re-pull your credit and include that debt into your debt ratio. If the score falls, you might not qualify again. Or if you buy a car or furniture that has a high payment, you might not qualify for the loan.
Is there anything else then that somebody should know about credit that maybe is overlooked, especially when they're applying for a mortgage, Sally?
Well, we have a lot of people that are watching their credit on the consumer sites such as Credit Karma or the ones that are with your free, with your credit cards. And the truth of that is typically those scores are going to be quite a bit higher than what we're actually going to pull on a mortgage credit report. And the reason for that is there's about 13 different models out there of credit reporting, and mortgage is going to pull the most comprehensive, so our scores are typically going to be lower than you see in almost any other place. So you should probably start with the mortgage before you decide to go out there looking for a home.